Hey everybody, this is Jose Blasco. We are starting in 20 seconds. This is a sound check. I'd like to confirm that you hear my voice and that we are ready to get started. So please go ahead and type a quick hello on the chat box. That would do. That way I know that you hear me. I will turn the video stream as well so I can be in the bottom right corner. How are you everyone? Here we go. This is the time to get started. So let's begin. Here we go. Thank you so much for the confirmation. Nice to see you, Abhilash, Maka. Very nice to see you. It's been a long time. We didn't have you in the session, so it's very nice, nice surprise. And I read your email the other day, so double nice surprise. Mark, how are you, Mark? Everybody good? Wonderful. So let's get started, everyone. Today it's October 29, 2020. This is our get-together session for longer-term trading. So in these sessions, normally our approach is options, isn't it? Options give you options. I've said that for many years, and it's true because without options, you would basically be limited to either go long or short, and that's the only two things you could do. But thanks to options, we can construct different types of strategies to benefit and profit from different market conditions. Okay, directional trades, non-directional trades, and more. Okay, so we will be looking at the markets from that angle, and if there are opportunities to be executed, we'll be delighted to jump on them. That's assuming they meet our rules. If they don't meet our rules, of course, we are disciplined traders. And what we'll do is change stock, change the market, looking for opportunities that meet the rules if the stock we analyze was not to provide a valid opportunity. Okay. Before we start, I would like you to read the disclaimer. So I am highlighting it right now, as you can see. So please make sure that you read the disclaimer. This is important information. Please read it carefully, read it completely. It's a financial disclaimer, like in all financial presentations. But again, we're quite proud of our disclaimer in the sense that it's quite thorough. Basically, it's telling you if you don't know what you're doing, don't trade. If you decide to trade, it's your decision. If you decide to trade, it could be paper money, it could be real money, it could be smaller size, it could be larger size. Well, all of those things imply that you are properly educated, you understand what you got in your hands to have those thorough decisions. For sure, more than happy to help you and help clarify all of those questions. Okay, so don't be shy, please, on the chat box. Keep interacting with me, and I will be more than happy to answer your questions. So just don't keep it to yourself, okay? Just interact with us, no problem. Very good. So let's begin the session, guys. We are, as you can see, utilizing the platform TradeStation right now. I would like to kind of run the session by doing, let's call it, let's go through a three-step process. Step one would be I would like to look at the markets very quickly to understand what is it that we got in front of us. Step two, I would like to look at prior trades that we had executed. So if anything needs to be said about those trades, I would like to comment on it because some of you may be running those trades. So and also reviewing trades, it's a very interesting thing as well because apart from you may be executing the trade and you would, I guess, appreciate comments when it comes to trade management. The beauty is for the ones of you that are learning how to do options, basically reviewing trades, it's kind of one shortcut when it comes to learning trading. And that way, after I'm done with reviewing the trades, I'm going to start planning new trades, which will resemble the trades we just reviewed. And again, that's going to accelerate the speed at which you learn. Okay, so I want to kill multiple birds in one stone. We are in for 45 minutes, right? So we'll be done at 11:45. This is New York time. And therefore, I want to make sure we use our time wisely, okay? So SPY, that's the S&P 500 ETF. So what do we see? Well, the market has been falling violently yesterday, especially a huge gap right at the upper end and then pretty violent movement to the downside. Nothing new, I guess. But if you have seen the market earlier today, maybe I can go ahead and do this. So I'm just going to change this to yesterday date, so 28th of October. And notice that what was happening is that we had two red UFOs right at the end of the day. So what's happening today right at the open well, what's happening today right at the open, this is October 29, is that the market is now bouncing back up, 0.60% up at this moment in time. Of course, one of the UFOs is gone. Why? Because unfilled orders have been filled, which is the reason why the market moved up. But those unfilled orders being filled are now gone, and therefore we are now left with only one UFO. So it's a tough one to define or have a clear expectation of what may happen at this moment in time, because first, when you look at the climate, as you can see, the climate is not confirmed, right? So the climate is not confirmed. And wait a minute, this is the monthly time frame. Okay, I was like, how can that be possible? With such a move that we had, how can the climate not be confirmed? Here we go. This is a daily time from now. Okay, so now this is better. So we have a down climate which is confirmed. Okay, but this is what I was going to say. So this climate has been progressing to the downside for 3 candles. Statistics suggest that the down climates should last 3.04, which normally I rounded up to 4. So it's 4 days. In other words, today or tomorrow, it's kind of like we are reaching that statistical limit where having the market fall further, it's possible, but it would be falling into the unlikely territory given what statistics suggest. And on top of that, having those green UFOs below. So probably if the market was to fall a bit more, I would say into next week, we should see the market start rallying, while next week is obviously totally unpredictable. Forget about auto climate. It's we have an event that happens every 4 years, isn't it? US election. So anything could happen really. But again, instead of having biased decisions in your trading, it's important to rely on market data. And if you wish, you could decide not to trade next week. If you are very conservative and you just want that volatility to go away, and then you get back in the game. So that could be understanding if you are that conservative. To me, as a trader, I just don't care if it's a pandemic or it's an election in the US or whatever that is. I just follow my rules. So I would be delighted to be in the trades. But again, that's just me. I am a bit aggressive, I have to say, while I always manage my risk. So I know exactly how much I'm about to lose if I'm wrong, and I'm happy with that. Now, the other thing I would like to comment about the markets is that the rival UFOs are quite far away. So in other words, if the market started rallying, okay, we may see a lot of volatility, but we may see a lot of volatility to the upside, not to the downside. So again, we may have some spice kicking in the following days. And when you look at the VIX, which is the implied volatility index, notice that the VIX, it's currently trading at 37. The last day we were running a session together, let me say this correctly, that was on the 22nd of October, right? So 22nd of October, more or less here. So we were talking about a VIX around 28. Right now the VIX is pointing at 37. Okay, so again, great level of premium in the options markets. Why? Well, obvious, the market has been falling very hard, so that scared everybody. You can see such a rally, such an increase in price of the options. But on top of that, with the elections coming next week, so of course, today, tomorrow, we're gonna have a lot of additional volatility coming into the options. Okay, and I would not expect the VIX to go much higher, because we got multiple UFOs above that will stop it, or potentially stop it from going above, let's say 42. And also below, notice we got green UFO. So I would not be surprised to see, the VIX to go something like that for a while, until the election is passed. Okay, because this level of volatility really is very high already. 37 VIX, it's not a joke. Okay. Cool. So with all of this said, of course, and you can see on my scanner, I'm already selecting non-directional as the type of opportunities I'm going to execute today. Why? Because volatility being so high, options are overpriced. So why would I buy overpriced options? Do we even have opportunities? Well, if I look at my directional scanner, it's pointing at Tiffany's for stocks to the upside, stocks to the downside, no opportunities. Why is that? Because options are very highly priced, and the scanner, it's basically stopping me from buying options and forcing me to sell options because it's a wiser choice. So I'm going to start with non-directional trades, but that's going to be my step 3. My step 2 is to do the review of the prior trades. So I'm now moving into step 2. Okay, so to be reviewed, I have here ATVI and Facebook. Okay, ATVI and Facebook, and those two are opportunities. that are actually concluded. I remember last week we were talking about it, and of course, options expire on Friday. Last week we met on Thursday, so the trade was not fully completed last time we met. That's why I'm showing you the trade today. Fully completed now, yes. So in other words, last Thursday was more or less around here. The vertical line pointing at October 23, that was last Friday, the closing time, 4 p.m. New York time. Okay, and basically what we did is that this trade with ATVI, that was an iron condor where we were expecting ATVI to stay below this UFO, above this UFO from October 8 to October 2023. And as you can see, that stock stayed in the purple area. So good job, great. And if you took the trade, I guess it was a good educational experience. That would be great. Yeah. Yes, Mark. Also, the scanner has no symbols in the credit spreads either. Why would that be? Well, actually, in my case, I do have a few. Okay, so if I look at neutral long, I got one. Okay, and if I look at neutral short, I do have multiple. So I would suggest, Mark, that you rerun the scanner. Maybe something got stuck. Maybe you have to delete the cache folder and do it again. I do have some symbols. Okay. Now, to the upside, I have very few symbols. Why? Because with a huge drop that we had in the markets in recent times, so most of the stocks are in down climates, and therefore doing credit spreads with a climate against you, it's not wise. So that's why, again, I'm pointing at non-directional opportunities, okay? Or if any, we can also look at credit spreads, bear call spreads in this case. Certainly we can do that too, okay? So ATVI, it's a trade that concluded for a full profit. So congratulations there if you took it. And Facebook, it's another trade that we planned together. That was on 10/15, expiration date 10/23. It's almost copy paste of ATVI. We took the trade that day at this moment in time, pointing at 287 and 247. That was the range where we expected Facebook to be. And on the closing, at the closing time on last Friday, so Facebook was indeed in the purple area. So those two trades, ATVI and Facebook, ended up with a full profit, which again, I don't have too much to comment since those trades are concluded. But if any of you were in those trades, I'd like to know how did it go? How did you feel running the trades? Did you do any alternative trade management approach to those trades, or did you just leave it alone all the way until the end? Okay, which is what I'm doing most of the time here on the YouTube channel, especially because for educational purposes, it gives me a little bit more wiggle room to comment what's happening to the trade throughout the life of the trade, beginning to the very, very end being expiration date. Certainly, trade management, it's a very wise thing to be done in those non-directional opportunities where closing the trade ahead of time, it's actually more efficient. So again, those are techniques that are advanced, and as of now, we have not discussed these to a very, very high level. They are, if you are curious, they are in the sharpening playlist. You will see some videos with the title Damage Control. So you can go ahead and take a look, because we did discuss in the sharpening playlist how to take an iron condor and convert it into an iron butterfly, for example, or other techniques on how to mitigate problems when a trade goes against you. Because obviously the reward to risk ratio of non-directional opportunities or credit strategies in general, it's normally quite weak. And it's fine because the probability of the trades to work well is very high. But if one trade was to not work well, it can be very destructive. And therefore, having those damage control modes in place, it's certainly a very wise thing to be done. Okay, so you can go ahead and watch those videos by yourself on your own. Okay, now let's begin then planning trades. Okay, we got 30 minutes in front of us. So what I just did right here is I took the non-directional list and I just sorted it from the most expensive to the cheaper stock. And again, I'll skip Amazon if that's okay. I'll start with W. The reason why I would skip Amazon is because my assumption, and maybe I'm wrong, but my assumption would be that a decent amount of you guys attending this session, either live or recorded, you are probably in learning stages. And being in learning stages, you either want to execute some trades with paper money, or if it's real money, it's going to be a limited size. Well, if you are doing trades on Amazon, you may end up minimum doing spreads of $10 spreads, things like that. And next thing you know, you're going to be, risking like $1,000 per trade, things like that. Again, to some of you, that may be absolutely reasonable, but I would anticipate or expect that for the majority of students in learning stages, it's just a bit too much, isn't it? You can always do it with paper money, but again, that's then you don't have emotions involved, so the learning experience is different, right? So in that sense, I think I do a better favor to you guys if I start with W, and we can always go back to Amazon if any, but I'll start with W. Okay, so here's W. So Wayfair, and with W, well, there is not much to do, to be honest, because the first thing that you could see is that the next earning date is happening on November 3, and if you look at the dates, expiration, meaning Fridays. The next one is obviously tomorrow, which is the 30th of October, and the one after is going to be 11/6, okay, November 6. So because the earning date is on 11/3, by the way, these earnings also coincides with the election, so it's going to be a pretty powerful day. So what happens is that we would have the result of the earnings happening prior to the expiration date, and therefore earnings could sometimes be motivators of gaps like this. Okay, I don't know if that was the case or not. And of course, this is the complete opposite that you want to see happen when you do non-directional trading. When you do non-directional trading, you want the market to stay quiet, right? So what I'm going to do, very simple, just go for the next one and we'll pass on W. So we are looking at Carvana. Carvana, it's reporting earnings today, actually, at 4 p.m. So obviously, we are not going to touch it, okay? And therefore, I'm moving to the next one, which is PayPal. And let's see if PayPal is providing us with an opportunity. It's not, because earnings are November 2nd, okay? By the way, we're going to have many cases like that where many stocks are about to report earnings. So, in general, the life of a trader is to discard trades more often than when you accept trades. Okay, that's in general, that's a rule, a rule that basically shows what type of trader are you? Are you a trader that just wants to click the button and focus on quantity instead of quality and make the broker happy with paying many commissions? Or are you a trader who focuses on quality and want to take few high quality trades and therefore work for yourself and maybe make the broker a bit less happy, but watch for yourself and your account, right? Well, again, not sure if this was humorous enough, but I guess you got my point, right? This is a serious thought, actually. And definitely we want to focus on quality, okay? So again, PayPal is another trade that we're gonna pass, because focusing on quality equals saying no go more often than saying go ahead, right? Accepting less often, discarding more often, okay? Electronic arts, so let's see what's happening with electronic arts. We got earnings on November 5. Again, same problem. November 5 is next Thursday. The expiration date would be 11/6, so it's not going to be able to work. So we move to the next one, which is Abbott Laboratories. Okay, Abbott Laboratories that have reported the earnings already. And in that sense, the next one will be in January 20 next year. So that one is giving us plenty of time. Okay, so we may have a trade. I would say very likely, we are going to have a trade to be executed on Abbott. Okay, now we're going to have to look at this from different angles, but first, take a look. With the UFOs, we get 52% UFO performance stat. Why is that important? Because if it's 48 or below, we just discard it. That would imply no institutional interest. So we will discard it. So 52, it's more than 48, so it's good. And also, I want to look at pre and post market to see how much we got. And with pre and post market, we got 41%, which is obviously under 48. So we ignore pre and post market data, and we're going to focus on the regular session data only. Okay, good. Now, if I look at the monthly time frame of Abbott, okay, notice that stock is basically making all-time high. Okay, so that's a stock that is very high. Okay, and therefore The problem of those stocks to do purely non-directional trades is that often we don't have two UFOs above price that we need to do our non-directional trade. But guess what? Today we do have two UFOs with Abbott Laboratories, okay, and hopefully those are going to be far enough to allow us to do the trade, because we do have two UFOs above and two UFOs below, and therefore we could now set up a non-directional opportunity. Okay, so how do we continue putting this trade together? Well, again, we remove all biases away from our thinking and observation, and therefore we're going to load Option Station Pro, switch the symbol to Abbott, okay, ABT, and the moment that symbol loads, here we go. The moment that symbol loads, what I'm going to do, it's utilizing the next expiration date. Actually, I use further expiration dates too, but I want to start with the shortest expiration date as possible. What I'm going to do is I'm going to right click to analyze and sell an iron condor on Abbott. Okay, and while I do need to select the right strikes, right now I'm just picking random strikes. The only thing I care about is what's my expiration and what are my one standard deviation above and below. Okay, so with the expiration date 6th of November, statistics suggest that stock may reach 114 or 99. Okay, 99 or 114. So 114 is all the way up here. Therefore, we have a big problem here because obviously our UFOs are here. So if I was to sell options above those UFOs, well, I'm not well protected because statistics, okay, forget about UFOs for a minute, which is the key, but forget about UFOs for a minute. Statistics suggest that reaching 114, it's a normal thing to happen, actually. It's not even a 2 standard deviation, it's a 1 standard deviation. And we discussed that in prior sessions where the meaning of a 1 standard deviation could be interpreted as something likely to happen. So in other words, while we have two UFOs above and below with Abbott, those UFOs are too close and we cannot do this trade. You know what? Let me not give up on Abbott so soon. What if we do, 1 second. What if we do, yeah, no, it's not going to work. So I was just looking at, because the volatility in the market is very high. Okay, so notice we got 43% volatility in the market right now for that stock. The VIX was 37, Abbott is 43. So I was thinking, okay, well, maybe we can be a bit daring and do an iron condor using tomorrow expiration. Tomorrow expiration is pointing at 109 to 104. Okay, so 109 is, sorry, Abbott. So 109 is somewhere here. Okay, so notice that, that will work. Okay, I could sell options, using the 110. Okay, but what's the problem? Okay, and that's why I was not too happy earlier. When I look at the 110, notice that the 110 call would only pay me 4 cents, and we have a rule which is we don't take less than 35 cents. Therefore, it's not going to work. Okay. By the way, most of the times when you do an iron condor with next day expiration on stocks, a different story is if you do it on futures or on indices, but when you do it on stocks, normally it will not work. Okay, so I'm just going to move to the next one, NTES, and see what we've got. Well, first of all, 45%, that's less than 48. I'm not happy there. What about pre and post market? 35, even worse. So we're going to pass and we go to JD. Okay, where JD is giving us 48% here. Okay, it's giving us 48%. JD is also giving us an earning dates of 13, which is good. If we look at a regular session, the 48 becomes 47, so that's not good. But again, there is one additional concern I have, which is the fact that stock is making all-time high. So when I go to the 55-minute time frame and I look at the pre and post market, remember, I need to have two UFOs above and below. So guess what happens above? There is no UFOs. Okay, there are no UFOs, and therefore, I cannot do the trade. So I'm going to move to ATVI. This is a stock we just concluded the trade with. cannot do the trade. Earnings are happening today, so cannot do the trade on the TVI. What about Merck? What about Merck? Yeah, I see no more comments on the chat box. Mark, I'm not sure if you were able to rerun the scan. I'd be curious to know if you were able to fix it. So with Merck, we got 47%. If we look at pre and post market with regular session, we have 53%, which that's way better. Okay, so I'm happy with that. Now, I'm not happy to see no data available when it comes to when earnings are going to take place. So normally I would just go ahead and discard, okay, and go for another stock. Okay, now we are reaching the bottom part of the list, so it's not like there are many stocks. So what I would like to do is I would like to add a show me to find the EPS postings. I want to see what was the why ease of movement. I'm not sure why that just showed up there. So yeah, so earnings just took place here, which was on the 28th. Okay, so earnings have already been reported actually. So I guess that the reason why it shows us no data available is because we don't know when the next one will be. But of course, earnings happen every 3 months. So given the fact that it just happened, so you know what, I do have a green light to go ahead and plan a trade on Merck, assuming the setup and everything I need will be available. Okay, so I'm just gonna delete all those lines. Okay, we did that before already. That was another iron condor that we did in recent times that worked well. So let's go ahead and plan the trade. So I want to look at a daily time frame first. Okay, so we're hitting UFOs. Market data below starts from, let's say, March 2020. Okay, so normally I load a limited amount of data on my chart. Well, actually, it's enough data, I guess, to do an iron condor. I have UFOs above and below. Okay, so 53%, and if I look at pre and post market, it's 47%, so that's not good. So I'm gonna stick with the regular session data for Merck. Okay, good. So let's go ahead and give it a try with Merck. We're gonna start with November 6th. Okay, and I'm gonna do the same story, right click, anywhere, analyze and sell, an iron condor. So I get my iron condor on my analysis tab. So I calculated automatically one standard deviation above and below, which is 71.68 and 80.5. Okay, so 71 something, 71 something, and 80.5, which is more or less there. Okay, so the dotted lines I just plotted on the screen represent where the price of the stock could go in a normal case. Okay, from now until November 6th. Now, for us to set a range in order to build an iron condor, our range needs to use, as we said a few times already today, at least 2 UFOs below and at least 2 UFOs above. So below we got UFO number 1, and this is UFO number 2. Okay, and that's fine because UFO number 2 is beyond the dotted line, so I'm fine. Now, if I look at the upper part, this is UFO number 1, this is UFO number 2. So if I stop my line there, okay, in one hand, you would say it's fine because that UFO is beyond the dotted line, and you're right, it's fine. But it's always a good practice to try to be as centered as possible in the range when we do non-directional trades. And one way I like to do this, which is very visual and very simple, is to basically drop a vertical line and just make it thick so it's even more obvious. And when I project it to the top side, notice how it's clearly telling me that if I measure the distance from current price to the bottom part and I project that above, so the upper part to be exactly in a position where the current price is equal distance from my above and my below purple lines, okay, well, that would be the location for that line, 8367. But that number means absolutely nothing. It's a hopeful number because there is no UFO there. So where is my nearest UFO? Is there. Okay, that's my nearest UFO. And then I got more UFOs above, but those are so much further away that then it would actually make no sense. Okay, and therefore this should be my approach for this particular iron condor as we are attempting this trade to see if it will pass our rules or not. Okay, so we are talking about 83. We are talking about 68. Okay, those are the strikes to be used. So let's take a look at November 6, and we said, I think I said 83, right? Yes, 83 or 82.5 would be valid too. But notice is deceiving because 82.5 is giving us only 14 cents. And remember, we have a rule that says that we don't do those trades unless we collect at least 35 cents per option. And of course, 14 cents is less. Okay, so what are we going to do? Well, I could go ahead and attempt doing it using November 13, because November 13, well, actually November 13 will not pay enough either. Okay, no, will not pay enough either. So that would force me to go to November 20. And if I go to November 20, well, now, yes. Okay. Now, what's the problem with that? I mean, I was sensing the prices not really increasing as time passes. Why? Because volatility is going down, as you can see. Okay, I guess the election risk is priced in the November 6th. Now, let's say I do November 20. What's the problem with that? The problem with that, as I click, okay, so watch these numbers here, 80.16 and 71. So I'm just going to click 1, 2, 3, and 80.16 became 81.66. Okay, so what does that mean? It means that now we're talking about 81.66, which is right there. Okay, and the bottom part, we are talking about 70, 69 something, so 70, which is somewhere there. So again, is this still a valid iron condor? Yes, because I still have two UFOs above and below, and the UFOs that I have selected as an extreme, both above and below, are both beyond the dotted line, and therefore this is still a valid statistical range for my iron condor using November 20. And also because earnings only took place right now and they won't be taking place again until 3 months later. So obviously November 20, it's an expiration date utilizing, how many days is that? 22 days to expiration. And therefore, it's definitely a valid trade to be planned and see if it works or it doesn't. Okay, so let's begin. Okay, and we said on the top part we're gonna use 82.5 or 83. Okay, so we got 82.5 there with 38 cents. So we're gonna do that. And the bottom part we said we are gonna be using the 68, maybe 67.5, yes, and 67.5 is paying us 42. Okay, so we got 42 below, we got 38 above. Both are more than 35. So far, so good. For us to accept the trade, but we're not done yet. Okay, so let me document this on the chart so you guys can follow. Also, I want to take a look at questions on the chat box because sometimes I get all focused and then I miss some of your questions. Still running, very good. You have Octa as well in the non-directional. Okay, great. Thanks for sharing, Mark. Thank you for sharing. So so let me document this trade I was saying. So we're gonna do an iron condor. This is done by buying. Okay, we're gonna buy a call above, and we sell a call. We sell a call below the call we buy, and then we are as of now we're using November 20, 2020 as the expiration date, and we need to keep in mind that earnings are a question mark right now, so we need to be careful with that, even though I don't perceive any risk short term, but certainly something to watch. And then below we're gonna sell a put and buy a put below the put we sell, and this is how we do an iron condor, right? And what we said is that on the top, so the calls that we're gonna sell, okay, they're gonna be the 82.5, and therefore it seems logical thinking about buying the 85, even though the 83 was available, okay, on the option chain. I'll come back to the option chain in a second so you see. It seems reasonable or logical to use the 85 because on the bottom part we're going to use the 67.5, and you will see in a minute in the option chain how there is no 67 or 66. Okay, it goes down all the way to 65. So let me show you that on the option chain. Okay, so you can see on the 60 area we got 67.5 and it goes down to 65. There's nothing in between. In the upper part we got 82.5 and we got 83. Okay, If I load more strikes, I guess we're going to be able to uncover the 85. You see that? Okay, it's there. And that's the one I'm going to use because that way I can have a balanced scenario where, the distance between my strikes, okay, the spread size, if you wish, is going to be $2.5 in both sides of the condor, above and below. So that way I'm building what is known as an iron condor instead of building what is known as a broken wing iron condor, which may require certain management steps, to have the trade perform in a way that is more equivalent. So we don't need to do that, and we can just keep it simple. Okay. So that's the plan. This is the trade that we are putting together. Okay, with the calls above, the puts below, and now let's get our final analysis here. So we said we're gonna do 85 and 82 and a half on the upper part. Okay, and the bottom part we're gonna be doing 65 and 67 and a half. Did I do this right? No, yes, that's not right. 80, yeah, I did this wrong. So 85, I'm like, this is not possible. And 82 and a half, here we go, now I did, okay. So let's talk about this, okay. This is the Iron Condor, okay. So this is the Iron Condor. We're using November 20 on the put side, which is the below part. We're going to be using 67 and a half and 65, $2.5 strike price increments. On the call side, which is the upper side, we had $0.5 strike price increments, but we're going to jump all the way to 2.5 to have the same distance above and below, as I explained earlier. So that brings us to 82 and a half and 85, okay? So that's what we do. If we were to do this Iron Condor, okay, and we were to do it using the midpoint, okay, which is not always possible, but it's always our first attempt, this Iron Condor would pay 34 cents. Okay, 34 cents. Is this acceptable? Well, remember, we are using two rules in parallel. The first rule that we use is that we need, okay, at least 35 cents per option we sell. And that we got it, okay? The 82.5 and the 67.5 were providing 38 cents and 42 cents, which is more than 35 in both cases. So that's fine, okay? What else do we need? Okay, we also need that the Iron Condor provides a credit, okay, which is at least 15% of our raw risk. So what is the raw risk? Is $2.5. Okay, our raw risk is $2.5. Where do I get that number from? Well, it's the distance between strikes, 67 and a half minus 65, or 85 minus 82 and a half. That's $2.5. And how much is 15%? Okay, how much is 15% of 2.5? Well, that is 0.375. Okay, that's what it is. In other words, 38 cents. Okay, 38 cents. And how much is the Condor paying? 34. So is that enough? No, it is not enough. Okay, it is not enough. Now, could it be that the market pushes down a little bit later in the day, especially since the market open has been moving up, right, today? So could it be that there is some profit taking, before lunch in 30 minutes time, or before the market closes later in the day? And next thing you know, now Merck starts falling, and because it starts falling, we got more premium coming in the options because of the natural inflation or addition of premium as people get fearful and they get desperate to buy options, and therefore they keep buying them with market prices, and prices starts going up, right? So is it possible that we hit 38, right, during the day? Certainly. So would it be a good thing for you to, assuming you're okay with this trade and you're okay with the risk approach and everything else, would it be a good thing for you to place a day order um, asking 38 or even 40 cents for the condor and leave it there for the whole day. And if you get filled later in the day, great. And if you don't get filled, then tomorrow you come back and you reassess these or other market opportunities. Yes, absolutely. Okay, why not? Right now we don't have what we want. And notice now it just went from 34 to 35. So could this happen a bit more? And 1 hour from now you hear the platform giving you a beep or any other sound confirmation, such as you just got filled on the trade. Yes, it could happen. Okay, so that's what I'm gonna do. Okay, that's what I'm gonna do. And just to be a bit extra visual in here, I'm just gonna add, as I always do, a vertical line that shows today, a vertical line that shows November 20. Okay, and we're looking at November 20 at the closing price, which is 4 p.m. And then, as always, our beautiful purple box, which represents the area where we need the stock to stay in for us to be profitable. If we were to wait all the way to November 20, and we were to do this trade, close our eyes, and wait all the way to November 20. Okay, so this is kind of like the worst case scenario. Okay, so in other words, it's not the super trade. It is not a trade for you to get filled at current price right now, but it is indeed an opportunity that may work if we get the premium that we desire a bit later in the day. Okay, again, we got 35 now. So what I would do here is to go ahead and click trade, okay, and then increase the credit to, let's say, 40 cents, okay, and keep it as a day order. Don't make it good till cancel. Keep it as a day order. So if you get filled during the day, great. If you don't get filled during the day, again, tomorrow, you can reassess these or other opportunities. Okay, so I'm just going to place the order. The limit was entered as a credit. This is a very weird error message. The limit was entered as a credit, a negative number. However, the last quote indicates. So this is probably an error from the last update of TradeStation. This is actually nonsense because I do have here credit, and this is indeed a credit opportunity selling. I'm just reviewing everything in case I made a mistake. Yeah, I didn't make a mistake. This is correct. So I guess if you have an error like that, okay, and again, it's not ideal. At the same time, it is real world of trading that your broker may update the platform and now you get an error message that doesn't make sense to you. So if that error message doesn't make sense to you, which it doesn't make to me, so a very wise approach, maybe it's because it's the simulated account, the one I'm using here, but a wise approach would be to pick up the phone and call your broker and confirm what's happening, because this to me looks like a bug after the update. My TradeStation updated earlier in the day in this particular computer I use for the YouTube sessions. So I believe it's 100% related to that update, I would say. So I'm not going to click yes. I'm not going to place the order because, again, it would be against what I just said. You would want to call the broker to confirm when you have a weird message like that, okay? Now, as human beings, sometimes we make mistakes, okay? I could have made a mistake and I got the -1 where it should be +1. I got the 82.5 where it should be 67.5. I got the call where it should be put. Could I have made those mistakes? Yes. And therefore that error message would make a lot of sense. But I just reviewed the whole thing and I don't see any mistake. So if you are really positive about what you have, but you get this funny message, then call your broker, confirm, instead of place the order because you may get in trouble. And even if you get in, you realize the mistake and you want to get out, still you got slippage on for contracts plus commissions to get in and commissions to get out, and you're not going to be able to claim that back. Is that making sense? So call your broker to confirm if something like that was to ever happen to you. Okay, so here's how I'm going to do it, okay, to kind of emulate that I got filled. So I'm just going to go ahead here and mark it like, okay, let's say I got filled at 38. I tried 40 and I didn't get filled at 40. Then I tried 39 and I tried 38. Let's say I got filled later in the day. So, okay, so that's it. I just set the price there as 38. It's kind of like I got filled, okay? This, by the way, could be one way for you to simulate trades as well. If you're using any other platform and maybe you don't have an options account or something like that, at least you can save those values or keep them a bit more tedious or manual, but keep them in a spreadsheet or something. And this could be one way for you to also simulate some trades without executing them. It's really not ideal. The best thing you can do is to execute them because it's also practice with the platform itself. But again, if you have an error message like today, or you are new to trading options and you don't have an account yet or something like that, there are simulators on the internet that don't require that you have a brokerage account and things like that, and you can do things like this. Okay, cool. So we are about to conclude the session. I have a few comments here from Mark. By the way, before I read Mark, you guys please go ahead and type on the chat box how is it going so far. How was the session today? How is trading in general? How are the markets? It's been spicy. 2020, it's really a fantastic learning experience. I'm really hoping for the ones of you that have not been trading for some time, that you've not missed like the whole year, because apart from lots of opportunities, there is a lot of experience to be gained. I've traded for over a decade, and there are things I've seen this year I have not seen before. Okay, even in 2008, for example, where I traded heavily that year, there are things that happened this year that I did not see in 2008. So you don't want to miss this learning experience. Okay, even if it's a paper money account, which is of course not the best, but certainly keeps you at least connected and plugged into what's happening in the market, and that's something that I would encourage you to do. Even if you're new to trading, to paper trade some of those trades so you are connected and you are gaining some experience. Okay. So share with me, guys, how is it going? How is your trading year? How was the session? And well, this is a trading session, right? But again, with a pandemic in the world, and beyond traders, beyond loving the markets and money, we are human beings. So I hope that you guys are safe, are healthy, your families too, and hopefully everything is going well in your end. Let me see. Mark, something must be wrong with your scans. You get no symbols. Yeah. So maybe, Mark, something you may want to test is to go ahead and anywhere where you have the scan, right click, go to settings, go to preferences, okay, and then increase the timeout duration. You can see in my case I have it as 1 minute, so it takes longer for the scans to run, but it diminishes this situation where sometimes you get no symbols. Okay, so try that. That may help. If not, you may want to delete the cache folder, start again, and if not, you may want to go to rest station. Okay. TOS says Merck earnings are on February 4. Okay, got it. So TOS got it updated. Very good. Thanks for that, Mark. TOS is only showing 1 cent premium for the Iron Condor. That's very weird. I would say you may have selected different strikes or a different expiration date. I'm using November 20, Mark. Make sure you're using that, okay? Tony Van Loenen, thanks for mentioning that this is a strange year. I have seen strange things these past months. Yes, absolutely, Tony. This is no joke as a year. No joke. It's absolutely unbelievable. I mean, just to share something that happened to me, so you understand how crazy sometimes things are. And more than ever, even though we should always manage risk and be disciplined, but more than ever, 2020 is a year where we need to be careful and put greed, euphoria, all those emotions, put all of that on the side and just be diligently disciplined and do just an impeccable job. So something that happened to me earlier in the year, just to see how sometimes, in this case, being so disciplined worked against me. But I'm proud of being disciplined, to be honest. So there was this one day, that was months ago, okay, that was at the beginning of the pandemic. The market started gapping down, and the futures markets were locked with a limit lock, a lock limit, and but the SPY ETF was not. So when I was looking at those markets, I saw a fantastic arbitrage opportunity like I ever seen in my life, where the SPY was about 10% lower in price than what the futures were because they were lock limit. But guess what? Right at the open, they would both start trading, right? At a 10% price difference. So you could short the futures and go long SPY, and that was a sure thing, 10% profit, no matter what. Uh, well, I could not believe that. I never seen such an arbitrage opportunity in such a heavily traded market and liquid like the S&P or the S&P futures. I have never seen that in my life. So I did not trust my market data. So you should see me rebooting my computer, reloading different platforms, checking. I would have the same information in all, but I would still not trust the data because it was too good to be true. And therefore, my rules imply that if I'm not sure, I don't take the trade. So I didn't. And next thing you know, it was true, right? But it was such an anomaly, right? Even though it was real, it was a complete anomaly, like something totally out of ordinary. And things like that. I mean, I'm talking about something really spectacular, but things like that and many other variations of things like that keep happening actually many days. Okay, not only one day or two, but many, many days throughout 2020. So you guys make sure to follow your plans, to be disciplined, and also to not to miss the practice that you will the practice and the experience that you will acquire this year, because you will get to see things that you have not seen before. Okay, I mean, at least that's my experience. And again, it's not like I've traded for 50 years, but the markets nowadays have nothing to do with the markets in the 60s, 70s, 80s, 90s, even at the beginning of 2000. It's all governed and controlled by computers, and all my trading has to do with a modern technological era. So it's kind of, I feel confident. I've seen a lot. Well, guess what? 2020 was a year where I got to see things I've never seen before, right? So again, we always need to stay humble and disciplined. And I do, again, repeat myself by saying that don't miss the practice this year. You don't need to execute trades with real money if you are not prepared or you're in learning stages, but certainly being connected with the markets and paper trade and or use small size or whatever your choice is, I would say that's certainly something relevant. Okay. Anyway, long one for me to share there, but again, I think it's important. You have a minute timeout and duration. Okay, so Mark, you may need to contact ThreadStation, because as you see, it's working on my end. So there may be something going on your end. And by the way, I just updated the platform and the scanner is working fine. So while I had something funny happen with the order placement, the scanner is working fine. So I would suggest a call to ThreadStation and maybe they can help you. Okay, cool, everybody. Super pleasure to conduct the session. Very happy to have you with me as always. I always forgot today. I guess I didn't. Just hit the thumbs up if you enjoy these sessions, guys, and spread the word. It's appreciated. And keep up the good work. And if you have questions, send emails, guys. support@tradictive.com, and we'll be delighted to support you and be there for you guys. You guys take care. See you soon. Bye bye, everybody.